It's May 22nd, 2014. Current time is 10:10 GMT. Jay Misley here with the daily Forex trading outlook. Uh, we've had a consolidating day overnight. Uh, Sterling was the initial beneficiary, but it's kind of backed off, and a bounce in euro sterling seems to have given the euro dollar some support, but it has not broken the 136.88 level. Now, if you look at charts, this market seems to be working in spurts. We made that low about a week ago at 36.47. It took a week to break, and we only broke it by a few pips. We bounced off the 200-day moving average, which is significant in the fact that it held. It was a target on the downside, and thus the pause. Discuss what's going on. This is an interesting time. What makes it interesting is that we're going against levels that normally don't show resistance. We had that long period here where we couldn't get past 137.35 basically. Now today we've been bouncing against 136.88. Show you where that comes in. I drew this line here. I never took it off the 1 hour chart. Look how we came against it yesterday and again today. Typically what happens in these markets is, you make a low or a high, and then the market has to correct, shake out the weak positions, in this case the weak shorts, before making a fresh run to the downside. But this has not it didn't take place at 137.30, 35, which was a real setup. We haven't seen it overnight at 136.88, where would be a likely place for stops. Market's not been able to run. Maybe positions are using, shorts are using wider stops, hoping to hang in there for the ECB meeting in 2 weeks. If that's the case, then market gets frustrated going after the stops, but typically it would go after stops. So right now, key levels obviously 136.88. If for some reason that gets taken out, you will see resistance here at 137.23. So 23 to 35 would be resistance. But coming into today, there's been a pattern of 7 days where 137 is traded. Those who follow me know that when these patterns go on, the longer they go on, the greater chance of the direction will move once it's broken. So far, 137 hasn't printed. If it does print, then maybe the market's in for a pause. If it doesn't print, the market will stay bearish. Offsetting that is 136.50, while within 136, 137. That's kind of a bias setter, so we're kind of almost like a neutral range, 136.50, 136.88. But the overall tone is bearish, as long as we stay below 137. As I said, market is short, wants to stay short, and it's going to try to do so unless forced out ahead of the ECB meeting. That's it for today. We have weekly jobless claims in the U.S., and I think it's existing home sales that's supposed to show some strength. And overall, that sums it up. We're in this market where it seems we need to do work at each level to erode the bids until we make another level, a move lower. If you look at retracement levels, 132.94 to 136.96. You come out with 135.62. So should the 200-day moving average be taken out, then 135.62 would probably be the next target. Otherwise, that's about it. One thing, by the way, and I post these links at the bottom of my charts, and I hope you people are clicking on it, because some of the insights really are invaluable. This one, it says, you believe in trading miracles. It's a response to a question I was asked. I think everybody could benefit from it. If you use hedging at all, you should look at it. If you don't use stop, you should look at it. And if you do use stop, you should look at it. The point is that this is a really worthwhile article to read. It's not a long one, but it really does give some pretty good insight. So the link is at the bottom of this page. Just click on it right here. It's embedded in the video. And that's it for today. Good luck and good trading.